All right, ladies and gentlemen, I hope you had a wonderful day. The winning streak for the market continues, and now the market is trying to break records. So before we talk about the big event with Powell tomorrow and even what happened today, we have to talk about this rally. The elephant in the room is everybody saying or debating if this is a bear market rally or not. We spent all day talking about that, even coming into the week, but now what happened here today? It is 7 consecutive green days in a row for the S&P 500, and it is the 8th day in a row green for the Nasdaq. This may sound like a lot, it may sound like nothing, but to give you some context, the last time we had a week anywhere close to this, it was November of 2021 and then November of 2020, and this was as a result of the vaccine being first announced. So it's a pretty wild backdrop. Everybody is already talking about the history behind this. Maybe I should take this down. I don't want to confuse it too much, but even for the S&P 500, this doesn't happen too many times. So the crazy part about this chart, this is going back since 1950. This is only updated till like 2014. So there's a couple of points that this chart is not including, but why I'm showing you such a dated chart, because if you go and look up the longest streaks of the S&P 500, you will deal with what we just gone through. You'll hear about the Dow streak and how that was a rally this year. Even last year, they were breaking records. You'll hear about 2021 and 2020, even the beginning of 2019. That was a 12-day streak, believe it or not. But a lot of times after any of that, everybody goes back to what we saw in 2013 and 2014 when there was similar moves after a lot of weird crisis following the recovery and everything else. So to give you context though, what just happened today, it's only happened about 51, maybe 55 times at max. You go into tomorrow, if we end up closing green, it'll be only 31 or 32 times that's happened, and then every day after that it gets a little crazier. Now I'm gonna throw in one more thing. This one is from one of those articles in 2013, but ironically enough, you heard from Bespoke Investment Group back then, and they were talking about not only, the very rarity of the market going up more than 8-9 days afterwards, but they specifically talk about the average return on the S&P the day after 8 straight days of gains and what happens on the 9th day, and they say it's slightly negative, although the median return is positive. So you could read this here a little bit, but the point I'm trying to tell you is that in the midst of this big debate about what the market is doing right now, if it's a bull market or a bear market rally, or if we're going to start hitting all-time highs, the interesting part is that you are starting to break records. After tomorrow, if that goes green, this is going to be one of 52 times or one of 30 times in the history of the market we start moving up at like this. And here's the thing. You're going to have to start putting question marks over why some of these things happen. Again, the way down on the bonds, this is something a lot of people have been talking about, both the yield curve all the way down to what you're seeing with credit default swaps. It's like, what is this event? Anytime you watch major peaks or major declines, usually something's going on. So what is this? And like I'm saying here, we're either going to get a really big shock the other way, or we're going to really confirm here. And then before you know it, people are going to be looking at this as the start of something. It's either the start of the end or the start of like the second gasp of air. It's like the 5th second gasp of air. So we'll see what happens. But Chattadonia, that's a big deal. We have more big data tomorrow. I'm going to go over all that. I got the plays for you, the keys, all the good stuff. What I need from you, a thumbs up on the video. Make sure you're subscribed. And if you don't know, we are live Monday through Friday, 30 minutes before open, youtube.com/thestockmarket. We will see you there in the morning. Run it, baby.
Working to the couch, it's the 20 on the lash. Live in the hills, but still get a spread. Starting with a live, but still reinvest it. Feel how I feel, then you feel like it's a blessing. I just want the lesson. I just want protection. I'm up and I'm down, but the sound like progression. Mama never plans if he waits for perfection. Finger to the down, hold it.
But right off the bat, before we get into the main thing we got to cover for tomorrow, and believe me, even if I don't cover it, you're going to have people shove this down your throat tomorrow because that is what has been happening. But let's talk about what happened today. It was a very interesting open because you remember those comments I was saying about Neil Kashkari yesterday? Literally, while I was filming the watch list, I included it in the watch list. Well, those comments had a little bit of weight in the morning. They came off as hawkish. It did not have a good vibe. And then in the morning, he kind of walked it back a little bit. You heard from other Fed speakers, although they were generally hawkish and stuck to the same script, nobody sounded as hawkish as Neil, and generally speaking, they all said the same thing. So we opened up a little bit lower. It was kind of, all right, maybe it was a bear market rally. Maybe the Fed's going to switch its tone, but by the time you had 2-3 other Fed speakers, everybody started sounding the same, and the market was able to brush it off, and then we started getting this weird little squeeze. Now, what ended up happening, there was a couple of events, not really. The only events were the Fed speakers, but there was a bond auction right at 1 p.m. Eastern time. So right here, even the market started moving. If we go to the bonds, you'll notice they took off right at 1 p.m. as well, and they even were able to close right above that too. So what happened? It was the 3-year bond auction. You have been hearing about these auctions. Last week, they were telling you on all of the media sources, they were saying it's bigger than Jerome Powell. I disagree with it, and even to this day, I'm still looking at it where, yes, the bond market is important. The bond auctions can have a big effect, but I feel like the damage has already been done. So, point being, a lot of people are paying a lot of attention to this bond auction news. We're even getting reactions on it, but you'll notice you'll get movements, but it's not like we ended up too crazy from where it was, just slightly right above where that happened. But it seems like how the day has progressed from Neil Kashkari to the bond auction, it's the same theme of last week where you got like these little events all the way leading up into Powell, and then you're like, okay, something bad could happen here because something bad happened last time, just like the other bond auctions and what we've seen over the last 3 months. So everyone's like, okay, this could be bad, and then once the event happens, nothing bad happens, everybody moves on. Bond auctions come in, it's slightly better, everybody's like, oh, that was close, and then they start to move on, and it's creating this little weird catalyst effect in the market. So why I'm bringing that all up right now, because tomorrow you would have a relatively more important bond auction, and we are also going to be getting Powell. So we have a two-step approach. Obviously, Powell will be the most important, but watch for the market. And this is a scenario I gave today. Powell is going to be speaking 15 minutes before the bell goes ding-ding and the market opens. There is a chance that he doesn't talk about monetary policy as much or sticks to the same script. So if he doesn't add anything new from what we heard last time, you know, where does this whole, okay, wait for Powell, where does that go in terms of guiding the market? Well, the market may have another reaction like we did today, and then brush that off until the next event. And then tomorrow, 1 p.m., same time as today, you are going to be getting the 10-year auction. So they will be auctioning, it's either $28 or $48 billion. This is what happened today on the 3-year notes, and people were asking, why is this important? One, it's because everybody's making a big deal after last week. It's very simple. Why are the bond auctions so important? It is because the bond yields have been getting destroyed. This is something we have been talking about, documenting. Yields go up. That is not good for bonds. So why is that a concern of the bond auction? Because as everybody is worried about rates, and you literally spent 6 months of every couple of weeks, the rates would climb higher and higher and higher. People were getting worried when they'd hear about more selling of bonds, and then you would get the results of the auctions. In this process, it led to the rates going up. These last couple of months, everybody was noticing, wow, there's a lot of supply in the Treasury, quantitative tightening, and then Janet Yellen, the wars, all of these things, and that's why they started getting spooked. So I was talking about this now. Rates are still elevated. This is why people are focusing on the auctions, especially after what happened last time. But generally speaking, we've been coming off of a nice little rally. As long as this holds up, it's bigger than any of the ones maybe since SVB. The bond auction shouldn't be too much of an issue tomorrow. But what's going to happen tomorrow will be the 10 years going for sale. They're going to sell all of these bonds, and essentially you look for a number. It's called the when issued, the WI, and if that number comes in higher after the auction, that means there was less demand. Rates go higher. They had to lower the price of the bond just so that they could sell for that supply that was available, and that is not a good sign. That means rates should go up, and vice versa. If the number after the auction is below the when issue, usually the market likes it. What happened today? It came in 0.001 below. They looked at the tail. They're like, okay, the bid to cover ratio, there's some demand. People got excited, but generally speaking, they were able to sell everything off. There was an appropriate level of demand and not a lack of demand that led them to raising yields. This is what people are going to be looking for tomorrow. So you have the auction, then we have Powell. As far as what Powell is going to say, I heard Logan today, and I think he might talk about that a little bit, where he's going to bring up long-term rates, possibly. I still think there's a chance he doesn't talk about any of it, but he brings up long-term rates, talks about the tightening effect, and just says, I can't even judge the market right now. We don't know whether or not, how much higher or how much lower actually tightens the market. And I think he's going to bring the words you want to hear and then effectively punt the ball. And then we start pushing into these next events, the auction. And from there, if we could keep skirting all of these events just like, it could have been worse, nothing happened, then we should, before you know it, end of November and then end of the year, and then we should really have a rally on our hands. Or we're going to find out real quick if this was a bear market rally, and then it gets even crazier for the end of the year. But now, let us get into the plays. So, right off the bat, I got a couple of different plays that I'm looking at. They are pretty simple, and even then today, I'm still not doing much. I'm still riding Netflix. I have Instacart, and I guess I was going to start with another play, but I will start with this. Remember, I've been holding 1,000 shares of this from at least a month now. This was part of my October rally that didn't materialize. Got it a little later. I'm up on it now. I have $1.10 a share. It's still $1,000. Max I was up was $1.80, but they have earnings tomorrow. So I'm either going to decide I'm either going to sell out my shares or I will look for the options to protect it. Then if I'm up right now, if I could find a cheap enough play, if it gets a good earnings run up, we could find a good middle, but I will be deciding tomorrow. But they have earnings. So they're a new IPO. Their first earnings, I think Clivio, what was it? KYVO? KVYO. They reported today and they got clobbered. So we'll see how this ends up playing tomorrow for CART, but I am definitely going to keep my eyes out for that. That is play number 1. Then play number 2, Amazon. So they're about to hit 52-week highs. They were not too long ago, just at 120 or even 108 and below. A lot of people have been talking about this, and I encourage you to even zoom out on the chart too even more, because they were killing it even in 2020, 21. They were chilling up here for a while. Amazon moves really weird, but that's not the reason why I'm bringing them up. I'm bringing them up because they brought up something called Pegasus, and they want to come out with a new AI. They announced this after hours to compete with OpenAI and Microsoft. So Microsoft went down a little bit. Watch both of these tomorrow. I really think it is going to be interesting how they play. So going to see if there's anything, but obviously Powell and all the other factors tomorrow, but mainly Powell. That should be the driver. And then again, his friend Bonds too. Don't forget about that. But that is play number 2. And then finally play number 3. This one, you may haven't heard it in a while, but Roblox. And what I mean by this play is that they report in the morning, and this is one of those plays, and we've seen it a lot here lately. Just be on the lookout for either the mega dump or mega rip, and then have a big move pre-market, sell off right before the bell, make another crazy move in the first 15 minutes, and then swing wildly. What I'm trying to tell you, I think for the first hour tomorrow, you're probably going to get 5 to 10% swings on Roblox, no matter what they do. So that's just how it's been trading lately, and after their earnings, I will be watching. Maybe I do make a play on this one tomorrow. I did cover my covered calls, so at the beginning of the year, they were going crazy. If you guys guys remember, I just sold a covered call on Roblo, sold like 50 or 65 calls on those shares I've been holding for years now. They came back down today. They were at like 4 cents, so I just covered them, spent like, I think it was like $30 to close it, then realized like $2,800 or $1,800. I got to double check on that, but a pretty good gain there for the most part, and even depending on how they do tomorrow for earnings, I will be able to sell covered calls again, but going to be watching them. And then Disney, they do have their earnings tomorrow after the bell, but I would say just be careful. Again, the pre-earnings run up, I thought they already had it. It's not loading up now, but they were going up earlier, so we'll see how it plays, but I'll play that one a little tentatively. Otherwise, we ride it out for the long term. But besides that, Chad, I would ride the wave, see if we start breaking records and making history, see if Powell provides anything new. But, Chad, before you know it, you're going to see more of this craziness in a new year. So I hope you're locked in, and I see you in the morning. But that is your watch list, ladies and gentlemen. Make sure hydrate healthy, ready to go. Make sure you post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. And I need you to remember to be like Powell. There is always a different tool for a different situation. You have even been trained, whether you realize it or not. You have tools in your tool belt. I know it sounds like Powell, but remember, different tools for different scenarios. You learn to master that in the mindset. You will be good, and keep going and get that long term. But I love you. Drink that water. Stay hydrated, healthy, all that good stuff. I'll see you in the AM, and peace and horn.